In this video, we share a real-world example in step-by-step detail of how to swing trade a hot market theme. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to have developed numerous 7- and even 8-figure per year traders. We hope you agree this is the top YouTube channel to help you grow your trading account.
This is a trade we took on AMD last week. 2 different trades, actually. It was a changing fundamentals trade. So let's get into it.
And so changing fundamentals trade, by that we mean a stock that has much better fundamentals or much worse fundamentals than the day before. In this case, lots more potential upside because of new news, because of a news catalyst than before.
Right.
It's a different stock.
Mm-hmm. Exactly. So starting off with the bigger picture, we have 2 charts here. Top one is of the SPY and the bottom one is
Qs. It the big picture.
Bigger picture, yes.
You call it the bigger picture? I call it the big picture.
Big picture, bigger picture? Tomato, tomato, all right.
All right, bigger picture.
First things first.
I'll be editing the playbook.
No directional bias in the market. So that is the very first thing that we notice. SPY and Qs can be observed to be in a tight technical range. As you can see, institutions who move the markets are very uncertain about what the future holds. And that can be pretty obvious by observing the price action. Inflation is coming down, but it is unclear how long interest rates will be held at current heights and what impact this will have on the growth outlook. The 5th point we have here is that, therefore, institutional money, big money that moves the market, is not moving aggressively within the market. So these are a few points, and I think Harry will get the next slide.
Love it. Yeah. So this is just how we've been sort of breaking down the market. Actually, we can do it here. So for us, we've created like a market dial from 0 to 5 on how we look at how institutions are moving money throughout the market. This is based on growth inflation policy model, how earnings are playing out, and then the sort of technical analysis of where we are and the price action that's unfolding in the main market indices. So as Cam just said, yeah, a lot of it has been very rangy over the last 2 weeks, and I think that's because there isn't enough clarity on where we are going to be in the next 3 months. So how are funds meant to position for that? So for us, that puts us as a market dial around 2 to 3, between 2 and 3. On this day, it was around 2.6, which just means for us, we focus on very much risk catalyst, stuff that's going to trade independent of the market. Because we don't have a market bias, we want to just avoid the chart, avoid the algorithms, and just stick with stuff that is clean.
So if your market dial, Harry, if your market dial was 4,
yep,
that would mean you're looking at the overall market?
It would mean we focus on longs. We'd still a mixture of technical breakouts, fresh catalysts, and market trades, but we'd be focusing to the long side. We'd want to have the window out back. We'd think that, let's say, growth is exploding, inflation's come down, and money's starting to be pushed around the market. And then we'll very much look at sort of the sectors. We have a big list of sectors, change from the open, change from the close, change of 5-day, 10-day, 20-day period. And we're looking at that to see how the funds are pushing monies and how the sectors, how we're rotating throughout.
And if the market dial is 1?
If the market dial is 1, yeah, we're focusing on shorts. For us, that would be what inflation is skyrocketing, growth looking terrible, money's coming out of the market. Likely we'd see the VIX is pushing higher on that day. The dollar's pushing up. Most sectors across the board are red. And we'd look to get short, focus on short catalysts, focus on market shorts, cover fairly, depends again on the market tells of that day, but we'd look to be taking off risk a little bit earlier and sell pops and take off into weakness and not try to hold for very clean downtrends for too long, obviously, because the market's going to be volatile and we're going to have more volatile price action. So just
And
trying to
what's the
adjust to those
genesis
things.
of the two of you using Market Dial?
It was a construct that I've sort of looked into over the last year, because I was always wondering last year, why am I really good in some markets? Why am I really bad in others? And it was, okay, I have to figure out what the market construct is, because a lot of my plays their work in different types of markets, because we're looking at institutional money flow and then building these bigger positions over multiple days. We need to know that the market supports that thesis. So for us, it was very much figure out how to put all that into a very simple score that just instructs us how to trade. And previous to that, I'd done a lot of research on just how funds are moving money, particularly through a growth, inflation, and policy model, where there would be risk on, where there would be risk off, what sectors are going to receive bullish inflows, dependent on where we are on that cycle. So for us, it's just been tracking that and making sure that our trades complement that bigger picture thesis on where we're at with that dial. And so, as you can see, the price action for the last month has kind of just put us in a range, and it's avoid the market, focus on fresh catalysts that are mispriced, that a news catalyst like the AMD comes out and it dramatically changes the underlying financials of the stock, and the stock needs to reprice, and funds are going to pile in to take advantage of the discrepancy and or the disparity in the different price. So that's what we've been trying to focus on, essentially, to this point. So yeah, this day, our vol was high. On the breaking news day, our vol was above 2, and then it slowly came down to about 1.5 for the remaining 2 days. But for us, that's just a great sentiment that institutional money is in the stock. We're above average volume. And then once we have an understanding of our vol, that institutional money is there, it's then trying to figure out how they are buying. Are they being aggressive, passive aggressive, neutral? For us, that would be, are they sitting at levels? Are they chasing higher? Are they just continuously stepping up? How are they executing, so that we can understand, right, this is how we need to trade this particular instrument?
With the fundamentals, the catalyst for this stock, this was the news that broke out on May 4th. Microsoft announced that they were financing AMD's specialized AI chip development. This was pretty big news, considering that AMD is the one of the largest specialized chip manufacturers, and Microsoft is one of the industry leaders in AI, recently having got involved with OpenAI. And this shows that Microsoft was willing to put money into AMD, and kind of betting on AMD's future as being a leader in these specialized chips. So this news catalyst aligns with the current theme over the past few months, and this theme being AI. AI is a sector with huge potential for growth, and funds are positioning themselves aggressively to try to and take advantage of it. We have tracked other stocks that have ventured into the AI industry over the past few months, and they have also received large institutional inflows, as well as we've noticed stocks purely with AI, the letters A and I in their ticker, also being bought by retail traders, which is also showing how hot this has been in the past few months. And this is a new technology really coming out of the past 5 or 6 months, and it fundamentally changes the value of the stock, because this is a new business and it changes the underlying financials. The market must now price in how it values this new business, and this is the core of the changing fundamentals trade.
Yeah, our assessment of this was that the new business was valued pretty highly, and that the stock needed to reprice it, and we thought that institutions would do the same. So therefore, we had a very heavy directional market bias, or directional bias to the long side. So we were trying to find ways to get long and stay long. For us, looking at the catalyst, it was very much independent of the market. As we've mentioned, this wasn't, if the institutions were there, if Arvo was there, if we really saw what we wanted to see, this would trade completely separate to the market on that independent day. And for us, the expected value of the trade, this is a metric that we've been talking about a lot, is The expected value for us, it was pretty high in this trade, given that it needed to move such a great distance in price to revalue. We thought that we could risk, the risk reward and the probabilities added up to, a great expected value that was worth putting a lot of risk on in this trade to take advantage of. And then we discussed the other that was there.
So here is the daily chart on AMD, and this chart includes the move that was made after the breaking news. Coming up into the news, we see that AMD was a bit in a slump, but this wasn't anything too pressing for this trade because the impact of this news catalyst significantly overrides any sort of minor technical details of the chart. And here is the actual day.
Well, let's go back to that. So you're basically saying that price action is price action before a potential really important news event. And therefore, since this is a new and strong news catalyst in a major hot theme in the marketplace, that you're not that concerned about prior resistance levels in a stock.
We are concerned about major areas of supply on the daily chart to see where the stock has the potential to move, but not putting too much significance on the closer price levels because they weren't driven by the same quality of catalyst that the breaking news was riding on.
And I think it informed us how we should be trading. We'll get into this, but there's three types of trades that we could take it, but it would inform us, given that we're having to get back through so many resistance level, if we're trading this on smaller time frames with tighter risk. I think for those smaller trades, those types of trades, I think we need to understand where those levels could be and just adjust our position and manage our position as probabilities and risk reward changed as we came in some of those levels. However, for the overall thesis of the trade and the bigger picture stuff, I don't think it really impacted that we needed to get through a fair amount of resistance.
Precisely. So here is the day of the breaking news. So this was May 4th. And as you can see at 1 o'clock, price started consolidating a bit, and then we see this huge inflow of volume, and we get this massive move. So price spiked from $83 to $92, which is approximately a 10% move. And that was pretty incredible. We didn't catch this exact breaking news, although this is actually another trade that you could take, hypothetically. Price faded a bit, but still closed close to view up, above view up by the end of the day. There was actually an additional part of this headline, which the vast majority of people misinterpreted. So the main headline was that Microsoft was going to finance AMD's AI chip development. Following that headline, there was another one that stated that AMD is actually reciprocating the efforts and helping Microsoft with their own chip, but that actually wasn't true. And many people weren't really observant about the which way the headline went. Microsoft denied that part of the headline, but the original one was still very much true.
Just the way we think about this too is, initially you get the reaction to the news and everyone's going to try and pile in. We've got a load of algorithms chasing that up quickly. For us, that wasn't going to be the heavy institutional money necessarily that is going to steadily buy this. I think the news broke. We know on the desk, how an institution is going to have to decide that. They're going to have to put a plan together, go to their risk managers, go to their floor managers, and sort of outline that trade. And that isn't probably going to happen within an hour. So for us, we were very much thinking, okay, this could take them a day to really get approval for buying a huge position in this. It makes it even more exciting then that we get this headline that, maybe refutes a little bit of what's been said, and we gap down back to sort of a really good value area with a clear risk point on the overall trade to then see if those funds start coming in and start executing the kind of size that we were looking for. in this bigger picture trade.
So here is the following day. As you can see, there was very early buying in the stock on large volume, which indicated that funds were getting very aggressive. And as the day progressed, we can tell by the shape of the candles and by the slope of the uptrend that there was very much steady buying in this. And this was because of institutional time-weighted execution algorithms, amongst other algorithms, of course. And there really weren't any steep pullbacks or retracements to VWAP, which you would usually see with a strong move. And we closed very close to the high, which is an extremely bullish sign for this stock. The next day, we can clearly see, so now on May 8th, institutions continue to buy the stock higher above the 2-day VWAP, which is the close of the VWAP from the prior day, and they are willing to step up higher and purchase the stock. Once the stock cleared the breaking news high of 91.25, it started really picking up because it was kind of in quote-unquote no man's land. And all the shorts who were initially positioned from the original headline on the breaking news day were trapped and were more than likely forced to cover. And price begins to accelerate pretty significantly and never retraces. And as you can see, price makes quite a large distance from VWAP as the day progressed. In terms of the tape, this was the definition of aggressive institutional buying. The bid on AMD continuously stepped up over and over again. When it did drop, it was a relatively smaller amount than when it was bought back up. So offers lifted higher by a much larger amount than bids dropped. And this shows that there was aggressive buying. Large selling on the bid was absorbed and large offers lifted very easily. Funds were scrambling to get their orders filled using TWAP or other execution algorithms, and the minutia of price did not really matter. Funds were therefore forced to climb to higher prices to find sellers to buy shares from. This is because there weren't enough sellers willing to sell a substantial amount of shares lower. The quicker funds had to adjust their position, the more aggressive price got because there were multiple orders competing for size, basically. And like I said, the institutional buying is very steady and consistent, a very clear uptrend, very clear slope, rather than a parabolic blow-off move you would see on a stock moving on no news or cheaper running on like retail volume. So that's the gist of how the tape felt during these days.
Those are good observations when you are creating an optimal playbook trade. Optimal to have examples of that from the tape and go back and find the tape that substantiates those observations, because those are important observations and you want to go back and actually watch that over again, see that, start to internalize what that looks like. So the next time you're in a trade like this, you can say, oh, okay, I remember what AMD looked like. This is a strong tape. From reading the tape, I'm getting strong signals, and it will help you to make better trade decisions. All right, so okay, moving on.
There were a number of trades that we could actually take in a setup like this. We did take two different trades. There was an intraday trade that we took and a swing trade that we'll get into. But here is basically how we would trade each of these three different styles. Starting off with the intraday trade, first things that we try to look for is we look for major price levels on a higher time frame chart where institutions could be positioned from. And this is usually starting off at an area where the news catalyst was announced, because that's really the most important area. And we want to decide how much size to take near each level. And this is dependent on the daily risk percentage allocation to the total stop out area in the stock. And by stop out area, I mean an area in the stock where we would say this thesis or this catalyst is no longer really valid and you really can't take a trade um, anymore. We want to monitor the price action and determine how aggressive sizing needs to be near each level. So, like I said, reading tape is a very powerful way of observing this. And we can't be too big too soon in the trade, or else we'll be forced to hit out while the price action is simply digesting. We want to, on a trade like this, we want to really just lose on the idea and not on the execution. And weigh the relative sizing as the trade starts working. So, what I mean by that is if the trade is consolidating, if it's trading a bit sideways, you don't want to have 75% of the total risk you are willing to lose on the trade dependent on nominal price fluctuations in that consolidation. You want to have most of that risk weighted towards the trade working out. And this is really important. You want to kind of align yourself risk-wise with the trade. You don't want to be caught off sides and take a stop because you're forced to hit out. And in terms of stops, you want to look for prior swing highs or swing lows. In this case, they would have been swing lows. And look at the 5 and 15-minute chart to determine these. And you want to place your hard stop a few cents below the low that you determine. So
Yeah, I just want to go back. So I don't really love the idea of advocating you don't want to lose on the execution when you're starting out. There's different there's different stages you go through as a trader. If you're more experienced trader, you might say that. I don't want to lose on the idea. I don't want to lose on the execution. I want to lose on the idea, maybe. But you're basically saying, if you're saying I don't want to lose on the execution, I want to lose on the idea, what you're saying is like, I don't need to get better at execution. I don't think that's the right way to teach somebody at the beginning. I think it matters a lot how you execute when you're starting out. I think it matters a lot that you know when the stock is about to work. And if it doesn't start to work right about now, that's information. I don't think you want to be sitting there saying, I've got this idea that this should go up, but I don't know as a day trader, as an active trader, I can't pinpoint to the moments when it's probably going to go up.
Mm-hmm.
That's not the type of trading that we're doing, particularly at the start of your career. You really want those skills, even if you become more of a swing trader. So I don't love you not worrying about getting the execution better. Does that make sense, Harry?
Yeah, it does. Can I add in just for a little clarity of what I think Cam was trying to say, which is
No, I've heard that said on the desk, and I feel like I don't like that being said by you guys right now in this trade. So go ahead.
No, fair enough. I think the way we're trying to execute is we have a value area. So, if we were talking about a second day play, right, we have a value area, which is where the trade has the highest risk reward, which would probably be 2-day VWAP. So we're looking for the stock to pull in and a fund to continue buying a 2-day VWAP. So for us, that value area is we want to get our average price as best as we can in that value area. And we want to use the price action as information to figure out how to do that and then how the stock is going to move away from that. So for us, the price action isn't necessarily executable. It is, but it's informing us so much information. And as soon as we see the turning points, we are then adding to that position against where we're wrong in the trade. So instead of taking a little consolidation price action trade, it would be more like this consolidation above VWAP is giving us great information that this trade is, we're seeing buyers step above VWAP. We can now get a risk point of, we can maybe add size here, but we're still risking to where we're wrong on the overall construct of the idea rather than the little fluctuations of price within that consolidation. And I think that's what Cam means by saying we don't want, we don't want to really lose on.
I think if you're saying, I'm identifying the turn, I'm seeing the turn, and I'm not getting long until I see the turn, and I'm giving it a real stop, that is a good way for you guys to be thinking about it.
That's the way, that's how we're trying to think about it. And then the price action as information can be used, but with way smaller sizing than what we're looking at for the overall trade, if that makes sense. So that we're really winning. We're not trying to lose too much on the price action. We're trying to make it maybe a little bit more, but we're not trying to lose what is the overall big picture thesis here, because the big picture thesis is the trade in this. And then everything else is just informing us how to execute it and how to really get big and where to get big. But just make sure every stop is to where we're wrong on the idea and how that's changed over time. So if maybe now we're consolidating above the high of day, then the stop changes. We've been there for an hour. We're showing that volume is being executed. Funds are willing to step higher. We know now that this shouldn't get back below V1. We know this should go, so the stop changes, if that makes sense.
For the swing trade that I took, I used the 30-minute and hourly chart to look for major higher time frame price levels, similar to the intraday trade.
So let me just take a half step back.
Sure.
You guys are doing this together.
Yes.
Good love.
Yes.
Why are you guys doing this trade together? Did you do this trade together? Did you just want somebody else talking and giving you a break?
No, I mean, we collaborated on the idea, and I caught the swing trade and Harry caught the intraday trade that he will talk about later. But it was a collaborative effort on this whole thesis.
Okay. And how did you collaborate?
We collaborated by using an Excel spreadsheet that keeps track of all these catalysts and all these themes. And over time, we can kind of build a thesis as we see. And Harry, if you want to talk about that a little bit more.
Yeah. So mining chaos processes, we very much trade similarly. And so we've found sort of partners in this on how to not validate, but just discuss trade ideas and how we look at things similarly. We have a lot of guys in our pod that look at things very differently. So it's great to have those influences and discussions. But then it's really nice to have somebody that trades similarly to you and can understand how you're thinking about things. And so we can construct trades, bounce ideas off. A lot of that starts with our sort of pre-market prep. We spend an hour in the evenings just on the phone going through everything that happened that day, how money's flowed through each sector, where is strength, how has the market dial changed, where we are in the market, then looking at best catalysts of that day, how they traded, what would there be continuation trades on those names coming into tomorrow, and then maybe what was the earnings, what are the news after the market, how we can interpret that, are there any trade ideas? We'll then look at each of those trade ideas individually. We'll grade the long-term chart, we'll grade the catalyst, we'll grade the expected value of the trade, and then we'll start to see how much we can risk or looking to risk on that potential idea. And then in the morning, we'll get in and we'll look at the news for the morning, and then we'll start to have a real plan about, hey, this is how we should execute this is how we want to go ahead. And then just on call throughout the day, just updating the narrative as things change, as price action develops, and just talking through, hey, I think the stop's changed. I think we need to bring our stop up to here. Hey, I don't want to see it in this area. It's really nice to have, again, some of the other guys that are more mean reverting traders in our group will say, I think I'm starting to short here. I like to see the short, and we're still looking, for the trend continuation. And so it just helps us inform how other traders are seeing it, and then just adjusting our process as that develops.
Yep. The second bullet point in the swing trade is you want to hit in as
close. Well, so how does it come up then that Cam traded an intraday trade and you traded more of a swing trade? Did I hear that right?
Yep.
Okay, so which I would have thought the exact opposite, knowing your personalities. So how does it? So you guys are preparing together at night and in the morning.
Yes.
Yeah. With other guys.
Yeah.
Who will go nameless for now. And you like this. This is a great catalyst, obviously. I mean, in terms of stock selection, this is a 10 out of 10, right? Yeah. You both, I would agree with that. Cam, you would agree with that. Harry, you would agree with that.
Yeah.
We got an intern off camera. He agrees with that. I can see him nodding his head. Jeff at home is nodding his head, I'm sure, as well. And Carlton is going to give you guys latitude on this trade, your risk manager. So yeah, so this is a really good news catalyst in a really hot theme.
Yeah.
This is where we want to be. So how do you guys sort that out? You're talking together. I mean, doesn't Harry say to you like, dude, like this is a swing trade, and you're like, no, Harry, this is a intraday trade. Like,
Yeah.
How does that conversation come?
So, and honestly, it's just because we're building out our swing playbook right now. It was more Cam, take the swing trade. Let's build the statistics there. Let's then start to, approach Carlton with, hey, this is how we're going to do these from now on. And, I'll focus on the intraday trade. That was more, it was more about development of where we want to go with this whole business, which is, finding these changing fundamentals. Let's build swing trades. Let's understand how we're going to do that. Let's pitch to Carlton. Let's get them, an amount of risk to take them, and then we're off and running. So this was, hence the two sort of, okay, I'll focus on this. We'll get a data point here for the swing trade that we can really look into. And
You're being a team player, Harry.
Yeah.
Cam's being selfish. Trying to print money.
we want. I think
So you guys, it wasn't that you disagreed. It wasn't that you disagreed. It wasn't like Harry, you sat there and said, "Hey, this is a swing trade, Cam. I'm going to take the swing trade. That's better for me." And then Cam said, "Harry, that's ludicrous. I'm going to take the intraday trade. Knock yourself out with that dopey swing trade." And you just went your own way. It was you were trying to get a data point for the swing trade, and Cam was taking the intraday trade.
Vice versa. Yeah.
Yeah, vice versa. Yeah. There was a method to the madness.
Wait, I got that wrong. Who was taking the intraday trade?
I was taking the intraday trade.
Okay.
And
I'm sorry. I just got off a flight from being in Chicago for Traders for a Cause, and admittedly may fall asleep at any moment.
Did you decide to turn this into a swing trade? What were your, because we're talking about two different trades.
Yeah.
Was it decided on entry? Was it decided at the midpoint in the day? How did you come up with that?
It was very much a conversation of before the open. This is the catalyst. Like, funds should be buying this. I think there was initially there's a little bit of skepticism about how the gap down had impacted the trade, but we had a great risk point, and it was let's take the swing trade, but let's just make sure that everything we want to be there for the swing trade is there, aka the arbor, the institutional buying, the consistent bid, that kind of stuff, and that proved itself. So the further we got into it, the more we wanted to.
So based on the catalyst, scored the catalyst positive 10 out of 10.
Yep.
The response on day 2 was not positive 10 out of 10. It didn't gap up. It in fact gapped down a little bit.
Yep.
You were basing your idea of this catalyst is a changing fundamentals, really extremely bullish catalyst.
Yep.
So this is a situation based on the catalyst alone that we will potentially be considering a swing trade.
Correct.
Right. Okay. All right, great.
Let's just do that trade. Let's just do the swing trade.
Yep.
All right. Is that okay?
Yeah, absolutely.
You guys need to argue about that?
No, that's fine.
Jeff, is that okay? Jeff, by the way, when you pipe in there, it's like from the heavens. It's like we're all in the conference room. It's like, God has shared his voice with us on this.
I'm usually in the seat listening on the other end of it, so it's kind of fun to be on this side.
Yeah. So last point is to target major areas of supply on the daily chart. You don't want to have a hard target, but you want to have a general idea of where price can go. And of course, it's important to observe how price starts trading around that area, and then you make your exit decision accordingly.
So the two points you just made were probably the most important points that you could make for any swing trade, which is you want to have areas of potential consideration and pay close attention to the way the stock responds to those areas?
This is the third type of trade that you can take that we will explore more in the future. Like we said, this is a 10 out of 10 catalyst, and we can actually use options to take advantage of this opportunity more and get more exposure to the trade. So what we would do is buy next week calls at a target price with a high convexity, which means in this case buying 20 or 25 delta calls with a strike price of 95, which was a good psychological number that fit in the area of supply on the daily chart. And these calls went from 20 cents to 250. So that's a pretty incredible return.
All right. So for young Joey trading at home, what do you mean by high convexity, and what do you mean by buying 20, 25 deltas?
Sure. So by that, we mean we want to buy a contract that will accelerate in value as the price of the stock increases. Basically getting the best bang for your buck in terms of the options contract. And 20 or 25 delta calls basically means that for every point the stock moves up, the options contract will increase by 20 cents or 25 cents. And it means 20 or $25 because one contract controls 100 shares. And yeah.
Yeah, I think the idea is just to find as many ways, given the catalyst, given how everything unfolded, this is a plus opportunity. Let's find as many ways to get risk on into this trade as possible from a swing perspective, from an intraday perspective, and then from an options perspective.
So question, and I agree with you that this was a really good catalyst, and I agree with you it was a really good catalyst because the sector's hot, and I agree with you that this is worth focusing on getting long. Excuse me. Yeah. How do you balance that with the importance of being open-minded with your trading?
I think
so. We agree, right? We agree that great active trading requires open-mindedness, and we agree that this is a terrific opportunity, and it'd be surprising if the stock didn't go up.
Yep, but be open-minded.
Yeah,
and I think the luxury of the trade like this, which is this bigger picture idea, is we get time, and for us, that means allowing the trade to prove you wrong before you make a trade decision. And that is spending time in price areas that we don't want or that we know the price should not be in. Rather than a wick down, a slip up, a volatile move, quick price action move, it's more, okay, we've consolidated for an hour. The character of the stock has changed. Maybe we need to readjust. And that, it's still being open-minded, but we're able to do it over a much larger, longer time span, which just gives us a little bit more fluidity and flexibility without decision making.
Cool. So here is the swing trade management. On the right, you can see the executions. It's a little bit hard to see, but in the pre-market of May 5th, you can see the green arrow. I got long, and it was a very, very clean uptrend. And price made its way to 95, and that was really the exit.
Where was your stop on that initial entry, and why?
82. So 84, we were risking 82, which was below the breaking news breakout point, and also then below value area from the prior day. We do want to see price get back down into that area.
Yeah. So once price broke above the close of the VWAP from the breaking news day, the stop was moved to a hold below that level, because you really don't want to see price, because that kind of leaches into the questioning of the catalyst, and that's not the greatest thing to see for a trade like this.
Yeah, as long as price stayed above VWAP on day one, we were willing to hold. We had the bias, probabilities that this would close within the top 20% of the day. And then opening up on the second day, the stop then moved up to prior day VWAP. So we didn't want it to hold below day one VWAP. And then let it trend into our target area, and we were able to take profit. And then there are so many opportunities, I think, going forward to add as the risk point changed, when price spent time and volume above certain levels. And I think that's where the sort of going forward, the swing trade blends with the intraday trade. And you hold your core, and then you're able to move in and move out of position based on the price action.
Right.
Intraday.
So in this case, we didn't take any partial profit, which is not necessarily how you want to trade this sort of thing every time. But this was a very interesting trade, and we are building out this playbook. We wanted to let the idea play out and see how price behaved near the daily supply area, which was this 95 level. And moving on to the intraday trade.
Go back.
Sure.
So you sort of truncated that answer there. You identified that holding the whole thing to target may not be the best exit strategy. And then you sort of moved on. Then you changed the slide on me. So, well, how were you thinking? I think you recognized that maybe that's an incomplete execution strategy. So how are you thinking through a more comprehensive, complete execution strategy, even for something you think has a lot of upside?
Well, that is in the trade review slide. But I think in the future, for a swing trade like this, we would use moving averages on the daily chart and see how they interact with one another. And if they start contracting or expanding depending on the trade that you take, we will look to adjust the risk accordingly and take partial profit, mainly looking at the daily levels for a swing trade. And additionally, for the remainder of the position, we would look to trail it with a moving average, most likely on the 30-minute or hourly chart.
Well, yeah, I mean, you want to be thinking through this. I mean, what happens if it went up to, your target was 95?
Yes.
So what happened? What if it went up to 94.75 and couldn't get above 94.75 for 2 hours?
Right. So that's very much an idea that we're trying to get better at. There is absolutely no reason to let that move substantially against you from there. At that point in the trade, we want to look at the quote unquote inverse risk to reward. So how much of the move are you giving up versus the reward of your quote unquote target? There's no reason to give back a lot for 30 cents versus many points that you actually captured. And this is the intraday trade that Harry took.
What happens if it got up to 94 and the ETF rolled over, corresponding ETF rolled over, and the corresponding stocks rolled over? And
the execution on that is very static, but it's the correct way to do it is very fluid. Is as probabilities change and the risk reward changes into your target level, we have to adjust, we have to take some, we have to add back. That is how we would trade that moving forward. Similarly to an intraday trade, we have our target level, and the risk reward changes from 3-to-1 to 1-to-1 trade decision. We need to manage the position as long as the probabilities haven't stayed the same, which would be an indication of how the price action is behaving, how volume is behaving, has the institutional buying stopped.
I guess so. Dan was in Chicago as well, and a newer trader came up to me and asked me to sign one of my books, and then asked me a question about stops, and was struggling with stops and said, hey, what's your advice on stops? And so I had to ask all the questions. The first question is, well, I mean, how experienced are you? What type of trading are you doing? If you're doing scalping, then you should have tight stops. If you're doing swing trading, then you have more softer stops. If you're more experienced, then you're going to have even softer stops. And I was chuckling as this trader was asking me a question about stops, because Dan like literally walked by, and for all of you who know about Dan's trading, like Dan doesn't really have stops. I probably shouldn't say that on camera. He has kind of stop losses, but like Dan doesn't really believe in stops. He gets to the point where the trade is over. Now he's a very experienced trader. He knows the trade that he's putting on. He's very rigorous with his trading, but he knows when the trade is over, both on the winning side and on the losing side. And if he isn't quite definitely wrong in the trade yet, he's not going to stop himself out.
Right.
But if he's in the money quite a bit and the winning is over, then he's going to get out. And so I think sometimes people feel like really good swing trading is only holding to target. And what target really is a way for developing traders to not short circuit the winning in the trade. Okay? But it's really just another way of saying, I'm going to get out when the winning's done.
Right.
And there's different ways, there's more ways to define the winning's done than just target. And so the lowest hanging fruit is for you to determine and add to your system things that are low hanging fruit like target. So it gets really close and is really steep to the price. That you've won. The EV's not there anymore, right?
Exactly.
The sector rolls over, it's close to price, the winning's over, it's not worth holding anymore. Something hits the tape in this particular stock, the winning's over, let's reevaluate. So, as you guys are saying, it's finally holds below VWAP. Hasn't held below VWAP, now it does. Time passes, starts to go lower, the winning's over. Those are ways for you to still be doing really good swing trading and still be holding for the real move.
Right.
The real move is not holding for the real move is not only holding to target. That is incomplete too. Okay. And I don't expect you to know that right away. I don't expect you to develop that system perfectly as you're developing. I ask that you get better at it and think about it and be more comprehensive about it. And Harry's a good person to be shooting ideas off of as well, as you gain more experience.
Great.
Does that make sense, Harry?
Yep, absolutely.
From these trades that we took, we learned how powerful connecting a strong catalyst with a strong theme can really be. And in this case,
I'll just highlight that. It's unusual to have a stock with such a strong news catalyst and in such a hot theme. You didn't just have, a lot of times we trade something with a strong catalyst, and that's plenty. This is a strong catalyst in a hot theme. AI is hot. Unusual. Okay.
So this provided huge opportunity on both intraday and swing timeframes. For the swing trade that I took, some areas of improvement would be better preparation for taking partial sales. Hypothetically, in the future, we could take majority of the size off in a daily area of supply and then trail the rest, like I said before, with a 5 or 10 day moving average. In this case, AMD did eventually move 5 points higher than the anticipated area. And being more prepared on that front would help with capturing an extended or continued move on the daily time frame. And for the intraday trade, we would like to focus a little bit more on the 15-minute and 30-minute charts. So when you observe the tape and you see that there's steady buying, steady institutional buying, you can treat it a little bit, or we would like to treat it a little bit more as an intraday swing rather than an intraday trade, because the levels that we traded on the intraday were chosen on higher time frames, and we think it makes sense to trade accordingly to that or a little bit more in line with that.
So question for your swing trade. Do you think you should only get into a swing trade if it's above important daily levels? Are there times, because you've got this new fresh news catalyst, right? And it's strong and it's in a strong theme. Do you have to wait for it to be above daily chart levels for you to be initiating a swing trade?
No. For us, it would depend entirely on strength of catalyst, theme that the catalyst is in, and then really the construct of the market. Are we in a bullish market?
So in this example, Harry, did you have to wait for clearance of daily levels to get into the swing trade?
No, because for us, no, because the quality of the catalyst and theme was so high, and we had so many data points over the previous months of stocks with similar catalysts doing exactly the same thing.
I would like for you, with your intraday fundamentals, to add the intraday fundamental data that we normally have with stocks: short interest, volume of the stock. You've seen all of that. What do you think about anything you can do with technology to help you with this trade?
So we do have scanners that look at sectors, and in this case, SMH, the semiconductor ETF, wasn't particularly in play. But in the future, for a trade like this, a way we could use technology would be to look at the strength of the sector as the trade starts working, and if we see positive correlation with the stock and the sector, and then eventually the sector starts curling down, we would probably look to adjust the risk or adjust our size accordingly to that. And that's a way we could use technology for a trade like this. But changing fundamentals is much more of a discretionary type trade. So it wasn't a very technology heavy.
Something that would help would be just collecting data on, we've collected every really good trend trade since January 1 in a sheet, and looked at why they're being bought up, how it aligns with the market environment, what their fundamentals are, what's the catalyst, how good is the theme. And it's just allowed us to have a little bit more conviction in, hey, this is a good catalyst. Look at this theme. We've had all of these data points. We can see how they traded over a 5-day period, whether they closed at the high, how they did intraday. It does help.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we've found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.